business or are you running a business? Valuation is the ultimate KPIs.
Hey there, welcome to the Valuations Podcast, brought to you by Trulytics, the premier business intelligence platform for the wealth management industry. My name is Mike Langford, and I will be your host. And let me be one of the first people to wish you a happy new year. Happy 2019. So whether you're listening to this right before the end of the year, I'm recording this on December 26th, so it's highly likely that you're hearing this before the year end. Or if you're just catching up with us right after the beginning of the new year, maybe you took some time off at the end of the year, a happy new year to you. I hope you had a wonderful holiday season. I know I did. So, it's interesting as we think about the new year. 2018 was quite tumultuous for our industry, right? We kind of came into the year thinking, my goodness, will this bull market never stop? And we went out with kind of one of those, oh my goodness, what is happening and what is coming next types of feel, right? And for me, one of the things that I always think of when we hit these, oh my gosh, what's happening next? Where is everything going? I always think that that means opportunity is knocking. Because if you look back at every single market crash, not saying that there's a crash coming, but major market correction, major or even small recession, anytime there's a change in the business cycle or some sort of shakeup and roll up and all that type of stuff, opportunity springs up for our industry, the finance industry, more specifically, but even broadly in the economy. You're going to see new things popping up that you didn't know you needed, right? We saw that with Uber, we saw that with Facebook, we saw that with a whole bunch of other things kind of pop up right during the middle of or right after major financial recessions or crises or whatever. And before you know it, you're like, I can't even imagine what it was like to live before those types of things. And today I am joined on the show by a guest who I think may have started a company that will do that for our industry. I'm joined today by Henry Yoshida. He's the founder of Rocket Dollar. And Rocket Dollar does something that I have long felt needed to be easier. There's no such thing as easier for average investors. And that is to be able to use your retirement accounts, like your IRA, or your Roth IRA or your rollover, right? So any type of retirement account that you self-manage, and use those assets to invest in things other than marketable securities. So other than stocks, bonds, mutual funds, right? Can you buy interest in real estate, an actual, like maybe an apartment building? Can you buy shares in a startup or another small business or closely held business? Can you own precious metals? Can you own crypto? Any number of things that you might want to invest in, that your clients may want to invest in. But until now, it was somewhat expensive and rather unwieldy, frankly, for you as an advisor, for you as a wealth management firm to assist your clients fully in investing in those things. And Henry and his company, Rocket Dollar, are looking to change that. And for me personally, as I think about our industry, and you may have either seen me writing about this or heard me talking about this in the past, I firmly believe that we need to go there, right? Because our clients increasingly, especially when they see turmoil in the public markets, they start looking to things like investing in startups, to investing in real estate and other investments that are less exposed to the ups and downs of the public markets and sometimes the concerns that average investors have in that space. So we want to make sure we're serving them to the fullest. So I'm really, really excited about this episode. I think you're going to get a tremendous amount of insights out of it. It's definitely something that's interesting. I've known Henry now for a few years, back to when he started his last startup that was acquired by Goldman Sachs. So he has a really good track record and great resume. And he also invests a lot as an angel investor in fintech startups. So I think you're going to get a lot out of my conversation with Henry. So without further ado, I give you Henry Yoshida of Rocket Dollar. Let's do it. All right. Hey, Henry, thank you so much for joining me this morning. Really a pleasure to have you on the show. I've been excited about having you on for quite some time because, you and I have known each other now for years. And earlier in 2018, as we close out the year, earlier this year, you launched your new startup, Rocket Dollar. And I was fortunate enough to have you present at the SoFine at South by Southwest event that I host, and get to see you in that rollout. And so ever since then, I've been really excited about Rocket Dollar and everything you're building there. But I thought maybe, to kind of kick things off, maybe we could chat a little bit about you and your journey, kind of get the IMDb version of Henry Yoshida's life and how it shaped you to get to launching Rocket Dollar.
Sure. So for me, a lot of people don't know a lot about my history. I came into the financial services industry straight out of college, did my undergrad here in Austin, Texas at the University of Texas, and had plans to go to law school, which never ended up happening. I took a job at Merrill Lynch, and when I was starting, it was basically the year 2000, a difficult time. Internet bubble was bursting. Austin was a very sort of technology-heavy town at the time, and it was very difficult for me to work with individual customers and clients to try to gather assets. And that's kind of the name of the game at Merrill Lynch, was to work with individuals. So I pivoted almost by circumstance to doing small market retirement plans. And kind of the rest is history. I never looked back. I spent 10 years at Merrill and continued to do retirement plans. Now, I think after 8 years at Merrill, I ended up spending the last 2 technically being an employee of Bank of America, and decided it was the right time for my team and I to go full fee-only independent. And we continued to do retirement plan consulting and built an RIA around retirement plan consulting for 4 years, at which point, kind of was always interested in technology, being in Austin, Texas, and you and I knew each other through this time. Decided that I would take my shot at trying to build a technology fintech startup. And that was a company called Honest Dollar. We raised money from Silicon Valley. Essentially, that was a robo-advisor, IRA-based, kind of functioned as a micro-business retirement plan. So think 2 employees to 20 employees. Honest Dollar was your mobile app-based sort of quasi-retirement plan. We grew that company, ended up ultimately taking an acquisition offer from the investment management division at Goldman Sachs. And then after kind of a wait-out period for being able to build something new, we're here at Rocket Dollar, which to me is interesting. You'll give Mike people the overview of the business, but it actually goes back to an idea that I wanted to pursue back in the year 2010 when I'd first learned about the ability to invest in alternatives while keeping the tax benefits of an IRA. And always had this sort of dream of mine to bring this to the more mass affluent and the masses. At the time, the only people who were using them were very high net worth individuals or people that had access to very specialized attorneys and accountants to help them set it up. And my goal was to build a platform one day in Rocket Dollar to make that more available directly to consumers and probably to just the general customer or client of financial advisors, a world I'd grown up in. So that's kind of me in a nutshell.
Well, that's really interesting that you mentioned that you were aware that it was possible for investors to hold alternative assets in tax-deferred accounts for a while, and you thought about how can you not only can you do it individually, but also how can you roll that out and make that much more accessible to the average investor. The first time I ever heard about the concept of holding real estate and other alternatives like precious metals and small business interests in an IRA was when Mitt Romney was running for president years ago. I think I saw something in his bio, and somebody was writing something up, and it was really interesting that he had an extremely large IRA.
Yep.
And it was very much because of this nature that he would, if he was acquiring a piece of a small business or if he was buying some real estate, he would put some of his ownership stake in his IRA. I was like, what the heck? How the heck do you do that? And then there was a whole concept of like, how did he go about doing it, setting up the accounts and making sure it's managed properly,
sure,
and so forth. What do you see? What were like the major hurdles to making this happen? Because, why was it so expensive? And then what did you see that would allow you to make it less expensive and more kind of democratize it, right, for the masses?
And I remember reading those same stories. So this was kind of Mitt Romney pre-politician days. So at the time he was governor of Massachusetts, was the Republican nominee for president against Barack Obama in a second term. But this goes back to his Bain Capital days and what he was doing. And there were luminaries in Silicon Valley that were doing the same thing. So, it's widely known as well that Peter Thiel, the first institutional investor in Facebook, made some of his investments into Facebook early, long before IPO, with using a Roth IRA and traditional IRA as well. So, when I looked into the space, one of the barriers I thought was just that it was a little bit of guarded information. So there wasn't any real barrier to making it difficult for the average individual person to do this from a paperwork standpoint. I mean, most of these individuals, Mitt Romney, maybe 1 million or so people in America that were using IRAs to purchase what we call alternative assets, as you mentioned, real estate, stakes in small private businesses, closely held, were mostly related to paperwork. So I just thought that technology is at a point today where if someone could manage the paperwork part of it, they can essentially establish the IRA structure. And then the more difficult part actually comes from the ability to guardrail individuals so they don't make prohibited transactions. So the real difficulty in purchasing alternative investments inside of your IRA was not how to set up the structure, but it was actually to ensure that clients basically invested in things that were allowed by the structure. So there's a couple of rules, and these have existed ever since the beginning of IRAs with the revenue ruling in 1978. Space I'd worked in my entire career, more on the traditional side. So I felt I was pretty grounded in knowing what the traditional use cases were for IRAs, and typically they were to purchase mutual funds inside of an IRA, through a financial advisor or through a brokerage firm, and thought that I could create a platform that essentially established those guardrails so people don't run afoul of prohibited transactions with disqualified persons. And that sounds a little bit like jargon, and it actually is. Those are specific IRS terms that they use in the code. So the goal with Rocket Dollar's platform was to essentially templatize that part of it. The paperwork part actually wasn't that difficult. And from all the research that we've done as a company in setting up Rocket Dollar, I can only find essentially that there was just a benefit to sort of closely guarding this ability and restricting it to what we call the 0.1 percenters, of which Mitt Romney definitely was, because he not only had a $101.6 million rumored IRA at the time, he disclosed that he had multiple IRAs that had 8 and 9 figure amounts at that time.
Jeez, wow, that's amazing. So I guess my curiosity is piqued, and I've not done deep dive research on the topic, but what are some things that are prohibited? You mentioned a couple of times there that there are certain things that are prohibited in an IRA. What are a couple of those things that should stand out so that people know to avoid those?
Yeah. So what is actually prohibited from an asset class standpoint that you cannot invest in with an IRA is pretty limited. So the IRS has been more in the business of being pretty limited in disclosing what you can and cannot invest in. So the only two that are actually codified in the code are you can't buy collectibles and you can't buy life insurance inside of an IRA. Other than that, there's actually nowhere written where you can do this or you can do that in terms of specific investments. You have to go one layer down. So when we talk about these prohibited transactions with disqualified persons, I'll speak more to the spirit of the rule since I'm not a CPA myself. But the spirit of the rule is just that you can't use retirement type money to invest in anything where you would personally benefit from. So the example, I just got off a phone call today with a CPA from one of the big 4 accounting firms who was interested in becoming a customer of ours. But just telling them that you can't purchase an investment property and plan on living in it by yourself as the primary residence. It has to be sort of a hands-off, arm's length transaction rental property completely. So that would be indicative of not benefiting personally from it. And then a disqualified person would just be yourself. Or a direct relative of yourself. So you can't invest in, let's say, your daughter's business, for example.
That makes sense, right? So I'm going to start my own startup and then put all my shares of my startup into my IRA. Probably not the best idea.
No, because you'd be benefiting personally, and you have too much control over it. But you can take investment dollars, from minority investors that way. So that's allowed, and that's actually one of the probably one of the top 3 use cases is direct investments into small, closely held private businesses, some of which may be tech startups, as we know in the technology space. Right?
Interesting. So, kind of a quick little, transition into what matters to our audience here, right? Wealth managers, individual financial advisors, maybe executives at large broker dealers. The thing that I've been kind of beating the drum on for this space is that, look, we need to expand our offerings, expand the scope of investment advice that we offer to clients, because for too long it has been, we are investment advisors on stocks, bonds, and mutual funds, and that's pretty much it, right? And occasionally those advisors may have insurance that they offer. Sure. But if you ask most, even in an RIA, you ask most of them, do you advise your clients and help them make decisions on investing in small businesses, investing in real estate, and investing in other things? The answer is more often than not, no. And now I kind of understand the reason why, right? That they've built their business in a way so that the technology supports rendering advice and managing the assets that are held in traditional marketable security format. So totally get that. But I thought maybe again, because you're so deep dive in this space now, what would be the advantages of an advisor or a broker dealer having a Rocket Dollar like solution to offer to their clients?
Sure. And I think we're just supportive of what, as I understand, most financial advisors try to accomplish today. So at the beginning, I've been a financial advisor myself going back to the year 2000 across 10 years in a wirehouse firm. I used to have 5 FINRA licenses. I still maintain my certified financial planner. And then after that in my RIA, we covered close to 200,000 plus participants inside of retirement plans and had about $2.5 billion in assets. So I have a good grasp of, I think, what financial advisors and a lot of friends personally of mine are in this business. And if you were to ask them, I don't think that the answer they give you is that they just advise their clients on the management of stocks, bonds, and mutual funds, but instead they talk about how they help people manage towards creating an income stream that would support them in retirement, of which alternative or any type of investment asset could be classified. So what we found is that a lot of financial advisors are very interested in knowing when a client of theirs might have alternative investments and other types of assets. They may not be able to technically track it on their platform, depending on the structure of their business and the relationship they might have with their own broker dealers as an independent, as a captive financial advisor, and so forth. And the way we wanted to design Rocket Dollar was essentially to say that, hey, there's a whole basically private and alternative investment world out there that more and more from what we see, and in my own professional experience personally, clients are interested in getting into, because it's a way to, one, diversify, both in terms of the asset class and diversification of the overall financial life of an individual, and then maybe secondly, to create different sources of potential income as a way to accumulate assets throughout their working careers heading into retirement. And financial advisors were lacking a tool to be able to incorporate that as a part of their business and helping their client at the high level. Because, when I talk to my advisor friends, they don't say that they help just manage a stock portfolio in most cases, because if that were what the answer they gave me, they're more likely to be a portfolio manager as opposed to a wealth manager for a subset of families and so forth. So we designed Rocket Dollar to say, hey, maybe we could design our product to where it could be integrated and connected into the systems and platforms that you use right now. So you can incorporate that. And if you happen to be a financial advisor who charges based on an overall holistic relationship with your client, you might be able to incorporate that in. And if not, maybe you just have the ability to have better eyes and ears and be able to see into the private and alternative portion of their portfolio that you really only got maybe a once or twice a year report on. Yes, Bob, financial advisor, or Mary, financial advisor, I have 2 rental properties that generate roughly $30,000 a year of ordinary income to me right now. And then I own another one inside of an IRA, generates another $15,000 in income. But, there's no way to connect that particular IRA to you other than just reporting that they're making $45,000 a year in additional income across roughly $750,000 of additional asset base that you're just plugging in as a one-off entry. into your system.
Right.
I want to be able to show in a way to incorporate directly so that financial advisor can, quite frankly, I think do the job that they were really hired to do, which is to help people with the overall financial picture and have very good line of sight into what the assets are.
And that's kind of where I was going with it. Is I think, I do know that most advisors, especially if they have, they offer what do you consider like a holistic financial planning solution to their clients, they will, advise like, oh, you have income coming from this other place, or you own something, and they'll plug, and it's kind of a self-reporting thing, right? To the client, once a quarter or once a year, will say, oh yeah, the value of my business or my rental property, this is the income I received this year. They might do a kind of little Zillow reporting on what's that property worth type of deal, and then plug it in. But what I'm really excited about with Rocket Dollar and what it has to offer for the advisory space is, this is now a new format, right? Something where you can actively help clients evaluate and invest in investments that they traditionally might have ignored just because of the complexity of it, or the challenges of investing in it with for most clients, and you correct me if I'm wrong, but I think this is correct, and I think I actually remember this from your presentation. For most clients, individual investors, their largest pool of investable assets is sitting in retirement fund format. So whether it's their rollover IRA or 401k or something, but it's not in traditional investment accounts, right? Taxable investment accounts. And so as a result, the average client is rarely exposed and given the opportunity to invest in small private businesses, real estate transactions other than REITs, right? That they might otherwise consider if they knew that they could access that pool of money as a source for getting into it.
That's correct. And basically what we're trying to become is the bridge for the close to $10 trillion that sit in IRAs. And if you add retirement plans, 401ks, 457s, 403bs, and some people in America, tens of millions of people still have access to pension plans, although most likely they're frozen to new contributions today. These numbers get up to close to $26 to $28 trillion. According to the Investment Company Institute, which is the governing authority for mutual fund inflows and outflows. They're probably the most accurate source of tracking what sits inside of retirement characterized dollars and IRAs and 401ks. So, you're really talking about tens of trillions of dollars sitting in mostly 99% or so traditional investments that could be tapped into for diversification purposes. And I think that there's a couple of things where I think advisors could be well served being able to utilize and tap into this space somewhat. One, they could use it as a differentiator. So I think from the perspective of how do I make an advisor's value proposition, and thus, in turn, it would make their overall practice more valuable. And it would be to have essentially access to new tools, ability to tap new dollars, ability to offer different types of investments in a very sort of tax efficient structure through a platform such as ours as a support to maybe the traditional business that they've run. So we've gotten a lot of our customers today are actually coming to us via referrals or partnership abilities with broker dealers and financial advisors. Maybe it's because it's the world I come from, but they just say that, hey, it's the 21st century and it's competitive out there, and I need something that I could tell as a value proposition, so I get to win the relationship with these new prospects over a competitor of mine. And I see the ability to let them tap into retirement dollars to do alternatives. And I always tell people that, look, alternative doesn't necessarily mean more risky. It could just be a way to diversify. Depending on who you ask, they may say that a physical, tangible piece of real estate that generates income on a monthly basis, depending on the time in the macroeconomic cycle, could be safer than a completely 100% equity portfolio, for example. So I've had a lot of conversations about how this tool is sort of an additive to their value proposition from the advisor standpoint. And it's also just a massive untapped pool of capital that's really generally sitting in roughly the same stocks, bonds, and mutual funds right now that advisors can use and point as a way to gather new assets, to get new customer and client relationships. And I think really maybe establish themselves as a 21st century financial advisor. by offering access to different things.
Oh, I agree 100%. The thing you mentioned there is that, I like the notion that alternative doesn't mean it's more risky, right? It oftentimes it is less risky, right? It is just an alternative to traditional marketable securities. And I think that's an industry term that somebody said, alternative investments, meaning it's not stuff we normally sell, right? If you think about the origin of the industry, everybody was called stockbrokers 30 years ago. They were dialing and selling. And when you heard from your advisor, your broker, he or she wanted you to sell something and buy something else, usually get into something else. And in many cases in the industry, there's still an element of that in that it's very product focused. And so that any product that doesn't fit into the umbrella in which we offer through our platform is an alternative. And now I think as we're seeing the industry, it's really, really important to start to cast that net a little wider. You've got a generation of investors who are a little gun shy on the stock market, despite the fact that we are coming off one of the longest sustained bull markets in history. The recent days are probably getting some PTSD on some certain investors, right? But you do still have a large population of the public who's somewhat nervous about investing in the stock market based on what they've seen in their lifetime. But I think also in our industry, advisors and broker dealers and other wealth management firms are starting to be cognizant of some changes that may affect their bottom line, right? That pricing compression is real. Some robo-advisors are starting to eat into the profit margins of lower value client relationships. Let's call it that, right? So the high net worth client management has been impacted to a much lesser degree. But when you start to see on the smaller side, it becomes easier for that newer investor to just fire up their robo-advisor app versus sitting down with an advisor.
Or they're being used as a way to get people in to develop a relationship. I mean, because I see the financial advisory industry evolving in a way to where your value proposition is changing. So back 10 years ago, maybe pre-robo-advisor days, your financial advisor provided you access to a professionally diversified or professionally managed portfolio. Now that part has become a little bit commoditized. So someone even with low dollar amounts can get access to professional management. So then the advisor's role became more of an overall manager of just income replacement in retirement, management of overall assets. There are things other than that, maybe introducing them to appropriate structures, whether it be from an insurance standpoint or retirement planning standpoint. There were other things that kind of came in to where the end of the spear was no longer professional management. It was a way to capture now the relationship, and then your value proposition might be offering something else. And even with the term alternative, right? That term is referenced and referred to different investments since the time you and I have started our careers in financial services. So when I started at Merrill Lynch, an alternative investment might have been a mutual fund that just traded, that had a basket of stocks in a foreign stock exchange. That might have been alternative then, whereas today it might represent direct private real estate or a digital currency of some sort. So that definition has really changed. And I think the robo-advisor component has really just turned professional asset management just in a static portfolio as an entry point to getting into financial services and wealth management. And now the advisor is offering a much broader array of services as a part of their overall value proposition. So connecting them to the right products, 100%. Connecting them to maybe the right even ancillary advisors that help, like a tax advisor or potentially even a real estate advisor or an insurance expert and so forth. And then I kind of still see the wealth manager as the hub in the middle of all that. And it's a very valuable place to be right now for individuals.
Oh, 100%. It's really been interesting. And I kind of bringing this all home to where Trulytics fits into this. this equation here is we are starting to see more roll-ups, right? 10 years or so ago, you could have counted the $1 billion IRAs maybe on, two hands, right? There weren't that many of them. And now a new one seems to be formed once or twice a month, right? Where you're starting to see some roll-ups. I think part of that is due to the aging of certain advisors that are hitting the kind of probably the back nine of their career, or maybe even the back three. But also there's a recognition that, hey, listen, we do need to offer our clients more services. We do need to be able to specialize in certain things. So let each individual advisor, member of the team, specialize in their wheelhouse, whether that is, like you say, insurance or estate planning, or sometimes it's just a vertical, right? Some advisors may really like working with people from the tech industry and others with the medical industry. And so we can kind of roll that up under one umbrella and have a much more viable firm for the long run.
Yeah, and
that can survive these ups and downs.
And we didn't talk about this part before, but the other thing too, just I've worked with retirement plans primarily since I've been in the financial services industry. And the thing I noticed is that I'm pretty active alternative investor myself. And before I discovered these accounts, I was doing it with after-tax money. So if a deal worked out well, I was pretty exposed from a tax standpoint. And the other sort of genesis behind Rocket Dollar was that I just kind of thought from a pure objective standpoint that it might make more sense to put your higher potential for higher return investments in a better protected account for tax purposes. But what I found was almost the opposite because of the way IRAs came about. So the vast majority of Americans do not, actively make that sort of ongoing in 2018 $5,500 a month contribution to get to an average account size of $200,000. Because right now, roughly 25% of Americans actually have over $200,000 in retirement savings. Definitely skewed probably towards the clients of the listeners of this podcast. But in those accounts, that's where we have our pretty, I guess you could say, standard mutual fund portfolios, because in a lot of cases, these advisors haven't actually captured those assets either. They might still be in a target date fund from a previous employer, and that client has yet to sort of consolidate with the financial advisor. And when they do, what I found is that people hold the pretty predictable, balanced portfolios of 60% stocks and 40% bonds inside of this account that has great tax purposes, but then they, separate from the financial advisor currently, might be dabbling in alternative or private investments, which have very high potentials for return and very high potentials for a very high tax exposure outside of the auspices and knowledge of the advisor themselves, and pretty much in an account structure that's not very well designed if the investment works out. So I'm trying to flip it on its head a little bit and saying that, hey, I think the financial advisor using a tool like ours can tap into the money and take advantage of the nice tax deferred and the tax advantage structure that's existed inside of IRAs, whether you own a mutual fund inside of it or an investment equity stake in a small private business inside of an account where it's much better equipped to handle a huge gain. The least of which is that if the investment works out on the positive side for you, you can actually control the way that you pay taxes on the back end, because you can make a $100,000 investment, get a $200,000 return for a now $300,000 total asset value, but then decide to only take $25,000 of those gains post 59.5 over the next, let's say, 15, 20 years after that. As opposed to if you owned it, $100,000 investment, you make 200 in gains for a total of 300. You have no choice. Your client is going to get hit with $200,000 of gains that same year, whenever the investment pays out.
Wow, that's a huge impact when you think about it.
Yeah, so it's just, kind of the financial planning aspect. And this is the part that I don't think that robos are equipped to do. Robos are equipped to rebalance a portfolio to a static allocation on a periodic basis, probably better than a human can do, because they can do it on a daily basis. They could maybe do direct indexing. But I think where the financial advisor comes in is to say, look, this is the impact long term. I mean, if you were to hold this inside of this account, you might be able to establish a structure where this investment will continue to grow, for the most part, tax deferred throughout your lifetime and maybe across the beneficiaries and so forth. I think these are the things that robo-advisors, although a computer could probably do these things, there's still an element to where it has to be explained to the individual client. And that's a part where a financial advisor today can add significant value to the relationship and probably as a bridge to connect with that younger generation. Because the other thing that you and I, Mike, both know, and probably listeners of this podcast know, is that the greatest fear of financial advisors today, who average close to 60 years of age, is that if their primary client, who actually tends to be even slightly older than the advisor in most cases, passes away, that the younger generation, either one generation down, and sometimes depending on the age of passing or passing of responsibilities, two generations down, has no link or no ability to capture that relationship. To me, there's this big generational wealth transfer. We talk about this, that roughly $20 trillion of financial assets, not in any other kind, just financial ones that advisors manage today, is going to transfer to the millennial generation. They're going to become the richest generation in history. And I guess the question I have to financial advisors of today, are you equipped? Are you in a position? Are you comfortable that you're going to be the recipient of these relationships when they go from your primary client today to their granddaughter 15 years from now? And I don't know that they have a very good answer to that right now.
Well, it's interesting, kind of a quick little aside. We talk a lot about it being, social, right? That is the number, if not the number one reason. Well, it should be for some of the older advisors you just described, is, one of your primary reasons for being active in social media and digital is to develop relationships, start to penetrate into those heirs, mm-hmm. right? And develop relationships so they know who you are. They know how involved you are in the client's life, that they start to see you as somebody to connect with as well. Because otherwise, you're exactly right. You may find that you wake up one day and there's a lot of assets missing from the system. And why? It's well, because they were taken over by the son or the daughter or the grandchildren.
Exactly. And you want to be in a position to maybe create that link. So beyond social would be that you could actually start talking to your clients about a way to sort of bridge and add value generations down while you still have the primary relationship.
Right. So this is really interesting. So we're kind of coming to the end here, and I want to make sure, because I have to believe that many of the advisors and the broker dealers that are listening are going, well, this does really sound interesting. I'd love to see us offering Rocket Dollar enabled accounts to our clients. I know you haven't built out the full infrastructure for tying into all the various broker dealer platforms and so forth, but what is a way that clients or advisors can reach out to you and get access to a Rocket Dollar account for their clients on behalf of their clients?
Sure. So we're up and running at rocketdollar.com, but our team here came from the financial advisory industry, so we're trying to always think about ways where we can add value today. So down the road, we'll work on integration capabilities with some of the broker-dealer components. But right now, to the independent financial advisor, we recognize that these people are looking for ways to sort of stand out as they're competing for new relationships, new opportunities to manage the wealth of clients and then build their practice even bigger. So we actually created asset kits for them. So these are kind of turnkey asset kits that any financial advisor could use that might have just very sort of generic, high-level information of being able to use retirement-type monies to invest in alternatives or private investments. And it has the ability for you to drag and drop your own contact information. So we've done it in a couple of ways. One is that you can make a one-pager or fact page that you can distribute out to your list in your prospecting efforts. Another one is that we allow you to basically create one slide and add that to maybe an existing PowerPoint presentation that you give. They're formatted differently. And then the third is that we can also work with an advisor too and create a custom microsite. So they could basically put out some very sort of high-level information talking about some of the things we talked about in this podcast. And then later, of course, we're always continuously working on potential integration capabilities. And I think, Mike, the way we envision that at our company is that we essentially want to be able to pass the information back and forth. Overwhelmingly, my life revolves around talking to many, many financial advisors who I've been friends with for decades. And what they really want is just the ability to see beyond just getting the self-reporting of anything that's not captured in their dashboard platform today through their broker-dealer from their clients. So if I can do a direct feedback and show them that, hey, these are 2 rental properties, or these are 2 stakes in a private business that my client owns, and have that get incorporated in just the overall delivery the financial relationship with your client, that's good enough for them. A lot of these people aren't even asking for money in a way. They just want to be able to help their clients with the overall and get better eyes and ears on it versus what we talked about earlier, relying on the self-reporting. But all that's there, partner pages at rocketdollar.com. We're speaking of social media, we're on social media too at Rocket Dollar. So pretty easy. Rocketdollar.com, ROCKETDOLLAR.com, and then Twitter handle spelled the same way. A way to reach out.
Well, that's fantastic. That's fantastic, Henry. I really do appreciate you joining us today. Thank you so much. I hope that lots of advisors and broker-dealers do come on and check out Rocket Dollar. I know I found it fascinating, and I think it's going to be something that is going to enhance greatly the wealth management industry. Because, I mean, look, this is something that people have been needing for a while, and we know that others have used it to great success. So now that it's becoming, like I say, democratized for the masses, if you will,
right.
Having the channel of advisors and broker dealers make it available to individual investors, that's just fantastic. Well, thank you very much. I'm looking forward to seeing you in the new year, by the way. We're both at our respective offices here, but hopefully in the new year we get to see each other in person.
All right. Perfect. I look forward to it. Thank you very much.
All right. Well, thank you very much, Henry. Have a great day. Mike. All right. That was fantastic. I totally nerd out on stuff like this, and I hope you're excited too, because I've been in this industry now for 25 years. In 2019, I joined the industry answering phones for mutual fund companies back in 1994. I was working for Boston Financial Data Services, answering the phones. We had mutual fund clients. And the thing that constantly gets me charged up about our industry, because we're seen as this old, sluggish, stodgy industry, right, by the general public, right? Financial people, they're boring. But man, the industry innovation that has happened in my lifetime, in that 25 years, is simply breathtaking. A lot of people don't see the innovation like we do, and oftentimes we don't think about it. And sometimes we think, oh, we're a little behind the curve on technological innovation. But personally, I think there's nothing is further from the truth. And I think Rocket Dollar, in democratizing the concept of allowing the average investor to invest in alternative asset classes, whether, we covered them at length during the podcast. But to me, that's at the core of our innovation, right? How do we serve more clients? How do we more efficiently serve existing clients? How do we take something that was previously only accessible to the rich and bring it down so that the average investor can have access to that product or that asset class type? And I've seen that over and over and over again, and it never gets old. So super, super excited about Rocket Dollar and other companies that are doing something similar. And look, for you and your business, this is the time. We're going into 2019, and a lot of people expect some negative things in the market. Are we in recession, or is the market going into a prolonged bear market? All those types of things. But this is when the innovation happens, as I mentioned in the intro. And for you, and you're going to be seeing some writing about this from me coming out on the Trulytics blog, and probably some audio and video on this concept. But for you, this is the time to dig in. So get into Trulytics. Make sure you understand your valuation. Make sure you're looking at the comps. How do you compare to other firms that look like yours? Because you're going to see some shakeups. You're going to see some acquisition opportunities. You're going to see some innovation opportunities for you. This is the time when big businesses are built. It's not during the upswing when everybody is making money, regardless of if they're a good business person or not. This is the time when the really good business people look at the opportunity and say, yeah, I'm seizing on this, while other people are trying to catch their breath and standing on the sidelines, worrying if they're going to survive the next quarter. You're sitting there digging in and making it happen. And I know that Trulytics can absolutely help you with that by allowing you to better analyze your business and get a better sense for what's happening in the industry. So if you haven't already, make sure you log in, get your valuation, get all your data in there, and start digging into what it can tell you. All right. I hope you're having a wonderful day. As always, please do like and subscribe to the podcast. Share it on social with your friends. Let them know that you're getting some good stuff. Do me a favor, also mention Rocket Dollar if you listen like this and really enjoy this episode with Henry as our guest. So go ahead and like Rocket Dollar's pages on LinkedIn and Facebook and go follow them on Twitter and let people know that you heard them on the Valuations Podcast. Until next time, I hope you have a wonderful new year, as I said, and we'll talk to you soon. Have a good one. Bye.